For as long as markets have existed, one thing has decided who wins. Information. The insiders always had more. They saw the trades, the volume, and the flow of money behind every move. And retail traders, well, they only saw the surface. Candlestick charts that told half the story. Indicators that react too late. Tools that keep you chasing while institutions stay 2 steps ahead. But everything changed when artificial intelligence came into the picture. Very quickly, the impossible became routine. Machines weren't just keeping up with us. They were outthinking us. Crushing grandmasters in chess. Bluffing poker legends who spent decades studying the game. Flying drones with precision that no human could match. And here's the part nobody wants to say out loud. If AI can dominate every game built on logic, risk, and timing, then what happens when it sets its sights on the biggest, most dangerous game of all, the financial markets? That's where this story begins. Because AI just cracked one of trading's hardest problems, spotting real reversals without getting faked out. While most traders are still guessing, this AI-driven indicator is already 3 steps ahead. It processes volume and trend data in ways the human brain simply can't. The result? An advanced SuperTrend indicator that adapts in real time. What once cost institutions millions is now completely free for you to use. Think about your trades. You see a trend forming. Price moves in your favor. Everything looks perfect. Then, out of nowhere, the market reverses and wipes your profits. Sound familiar? The problem isn't your strategy, it's your tools. Most traders rely on basic trend indicators that only tell you what has already happened, not what's coming next. They miss the early warning signs that smart money acts on. This creates a huge disadvantage. You're always 1 step behind. You enter after the institutions have moved. You exit after they flipped sides. It's like playing poker against someone who can see your cards. You might win sometimes, but in the long run, you'll get wrecked. But what if you could level the playing field? What if you could spot warning signs before everyone else using a system that combines 3 key elements? Trend direction, volume analysis, and something called kernel density estimation? That's exactly what this indicator does. In this video, we'll show you how to use this indicator for completely free, explain how it works, and how you can use it to catch reversals before they happen. Let's dive in. Before setting up the indicator, you need to understand how the classic SuperTrend indicator works. It's simple. The SuperTrend takes the average true range, or ATR, which measures how much price moves on average and multiplies it by a factor. That number creates dynamic support and resistance levels above and below price. When price closes above the line, the trend flips bullish. When it closes below, it flips bearish. But here's the problem. These calculations ignore the most important factor in market moves: volume. Price can move up on weak volume, but it's not a real trend. It's a fake out waiting to happen. Price can rip through a key support level on low volume. That's not a real breakout. That's a shakeout before the real move. Professional traders know this. That's why big trading desks hire volume specialists. That's why algorithms use volume-weighted indicators, because volume tells you if price movements are real or fake. And that's where this machine learning SuperTrend indicator comes in. If you want to add it to your chart and follow along, open up TradingView and head over to the Indicators tab. Search SuperTrend plus Relative Volume Kernel Optimized and click on this one by Flux Charts. There'll also be a link in the description. Instead of only tracking price swings with ATR, it measures relative volume, today's trading activity compared to past patterns. That's the missing piece. Weak volume on a rally, that's a red flag. Explosive volume on a breakout, that's confirmation. The context of volume changes everything. Let's take a look at an example. Tesla typically trades 75 million shares per day. Today, it's trading 64 million shares. Is that high or low volume? Most traders would say that's slightly below average. Now, here's where it gets interesting. If you look at the past 5 days, Tesla only averaged 40 million shares per day. In that case, today's 64 million looks like a big spike, and that difference is exactly what this indicator captures. But it doesn't stop there. Not all volume is created equal. A spike at the market open doesn't mean the same thing as a spike during lunch. Volume during an earnings call doesn't look anything like a quiet random Tuesday. That's where kernel density estimation, or KDE, comes in. Think of it as advanced pattern recognition. It knows that 500,000 shares at 9:35 a.m. has a completely different meaning than 500,000 shares at 12:30 p.m. It adjusts for time of day, market conditions, and recent history to filter noise from real signals. And here's where it gets even smarter. Traditional indicators use fixed settings. Your SuperTrend multiplier is always the same, whether the market is exploding with volatility or crawling sideways. That's like using the same golf club for every shot. Sometimes it works, but most most of the time it doesn't. This AI-powered SuperTrend adapts. When volatility spikes, it reacts faster, picking up reversals that a standard SuperTrend would miss. When the market is slow, it holds back, filtering out false signals and waiting for stronger confirmation. In other words, it adjusts to the conditions you're actually trading in, something fixed settings can't do. So how does this indicator actually work? Let's break it down step by step. Step 1. The indicator starts with the classic SuperTrend calculation. It uses the ATR length and multiplier you choose, and it plots that familiar band above and below price. Whenever price closes through the band on a confirmed candle, it flips direction. Bullish on a close above and bearish on a close below. That part is simple and gives us the backbone for trend direction. Step 2. Here's where the indicator starts to separate itself from the classic SuperTrend. It doesn't just look at total volume, it breaks each candle into buying and selling pressure. Then, it compares short-term averages of that buy and sell activity to longer-term averages. Think of it this way. The indicator looks at how much buying or selling is happening right now compared to what's normal. If buying is suddenly much stronger than usual, that's real demand stepping in. If selling jumps above its norm, that's real pressure pushing price down. By comparing short-term action to the longer baseline, the system can tell if a move has real strength behind it or if it's just noise. Here's what most traders never realize. The system creates volume percentile rankings. Is today's volume in the top 10% of recent activity, the bottom half? These rankings help determine how reliable price movements are. High percentile volume confirms trend moves. Low percentile volume suggests fake outs. And finally, step 3. This is where the math kicks in. Kernel density estimation takes all the past flips and the volume conditions that came with them, then builds a probability model of what real breakouts look like. When the next signal comes in, the indicator checks today's volume against that history. If it matches the profile of strong, high-quality flips, the signal carries more weight. If it doesn't, it's flagged as weaker. Now here's where you can take control. Inside the settings, you'll see something called KDE threshold percent. This is basically a quality filter. Every signal the indicator generates gets scored from 0 to 100, showing how today's volume compares to past flips. For example, if you set your threshold to 70%, the indicator will only trigger when the breakout volume ranks in the top 30% of past conditions. In plain English, it forces the indicator to ignore weak, low-quality flips and only show you the ones backed by real participation. Now that you understand exactly how the indicator works, let's see it in action. We're looking at Bitcoin on the 15-minute time frame. Price has been trending down and now it's starting to base out. This is usually where traders get chopped up. The classic SuperTrend starts flipping bullish, then bearish, then bullish again, because price is crossing back and forth around the band. 3 flips in just a handful of candles. But here's the problem. Those flips are happening on low volume. There's no real participation behind them. If you were trading that, you'd be long, then stopped out, then maybe short, and stopped out again. Pure noise. Now look at the AI SuperTrend on the same chart. Those same flips never triggered because the KDE percentile scores were too low. The indicator knew this wasn't real strength. It waited, and when Bitcoin finally pushed higher with volume, a long signal printed with a 70% label right on the chart. That was the confirmation. 1 clean entry instead of 3 bad ones. That's the difference. The classic SuperTrend gets you into every cross, while the AI version only flips when the volume backs it up. Now let's go to the second example. Still Bitcoin, still the 15-minute chart. This time, price is grinding higher into a clear resistance level. On the push through that level, the classic SuperTrend flips long right away. Price crossed the band, so it does what it always does. A few candles later, what happens? Price fails, drops right back under the level, and anyone following the classic SuperTrend is now stuck in a bad long. The AI version, no signal at all. The KDE score was only 25%, so it filtered it out as a weak breakout. So here's the bottom line. This isn't about adding another flashy signal to your chart. It's about cutting through the noise that costs traders money and only acting when the odds are stacked in your favor. That's what this AI-driven SuperTrend does. It keeps you out of low probability trades and gets you in when the move actually matters. And remember, this is just your starting point. If you want to take things further, we've built a full suite of advanced indicators for traders who are serious about their edge. AI signals, multi-time frame price action features, powerful screeners, and even backtesting tools so you can prove a strategy before risking a single dollar. You can get instant access to all of these tools today at fluxcharts.com. There's also a link in the description. That's all for this video. If you got value from it, hit the like button, drop a comment to let us know your thoughts, and make sure you're subscribed so you don't miss the next one. Thanks for watching, and we'll see you in the next video.